Hey future millionaires! In this video, I am going to help you better understand the trading lingo so that you will not be confused and you'll have a better time understanding trading going forward. Well, let me just reintroduce myself. My name is Tanisha T, and my goal on this channel is to help individuals make anywhere from $100 to $1,000 using trading. So let's get right into this video. So guys, on your trading journey, you're gonna hear different terms, and I wanna make sure you understand what they are so you aren't confused and you'll be able to make that $100 to $1,000 a day. So first thing, make sure you have a pen and paper because I always say note takers are money makers and we are here to learn. So make sure you are taking notes. All right, so here we go. First off, you are going to hear a term called scalp or scalp trading. It is a strategy. And simply being said, scalping is entering and exiting a trade within minutes and even seconds, right? You can be in a trade for 30 seconds to 2 minutes and make your money and be out. So scalping is literally a quick grab of cash and you are done for the day. All right, let's go on to the next term. Swing trading. It is another strategy of trading options. This is where you hold your trade for a longer time or a longer expiration date, right? You could have a week out expiration date, 2 weeks, a month. It just depends on where you determine the price is gonna go. So for example, if you have an Apple stock and it's at $100 and you believe the Apple stock is gonna get to $200 because you've heard of earnings, you've heard some news, whatever your theory is, you think it's gonna go up, right? So you're gonna go long on that or you're gonna do a call, right? But you don't think it's gonna happen right away. So you would swing that Apple trade for a longer period. So you might have an expiration at the end of that particular week, or you might say, I'm gonna give myself a few more weeks out. Right? So you could go as far as 3 weeks out. But keep in mind that the further out your expiration date is, the higher the premiums go, the further out, because you're giving yourself a little more chance for the price to get where you want it to go. So let's go on to the next term. All right, y'all. So we're on term number 3, and this is going to be TP or take profit. That's simply selling your position, right? So for example, we'll still use Apple as the example stock, right? You have 10 contracts of Apple, right? And you're ready to take profit. It's literally take your money and put it in your pocket, right? So going forward, while you're trading, you may have levels marked, or you should have levels marked on your chart to know where to take profits. And I should have other videos about levels, critical levels, and how to take profit. But for informational purposes, when it comes to vocab, taking profit is literally selling your position so you can actually take away some money from the trade. So best practices when it comes to trading and taking profits, I'd like to have profit targets on the upside and also on the downside. I usually have 3 profit targets on the upside and 3 profit targets on the downside. So for example, if I think Apple was going to go from 100 to 200, I am going to have 3 profit targets on the ladder heading up to that 200, right? So what I like to do is at TP1 or take profit 1, I take 50% off of that contract. So if I had 10, I would sell 5. So then I have 5 runners still going to go to take profit 2. If the price gets to my price target 2, I might take half off of that again. So half of 5, you really can't do half of 5. So you have to decide if you want to do 2 or 3. And then my runners are still working to make me money at TP3. At that point, you have the decision to sell all of your remaining contracts or just sell 1. So the best practice, what I like to teach my people in my Discord, in my group, is that we need to take profit. Prior to learning this skill or acquiring this skill, y'all, I would just sell all my contracts at TP1 and then the stock continues to go in the way that I predicted. So in this case, when we have TP1, these points to meet, we actually get to take profit and manage our risk. We get to actually reward ourselves from staying in the trade longer. Okay? All right, so let's go on to the next thing. Buying power is the next term I want you to pay attention to. Buying power is simply the amount of money that you have to actually buy stocks, right? Or buy options. If you have a trading account of $2,000, your buying power for that day is $2,000, right? So if we're gonna take our first trade, Apple, I guess is my example stock, right? You risk $1,000 and you make $200. Essentially, you would say now my buying power should be $2,200, right? Because you made $200, but it is not the case. Once you have made money off of your trades for that day of trading, you do not have access to those funds until the next business day. right? Those are unsettled funds, okay? So we cannot add whatever profits we've made for that day into our buying power. It's just the way it works. You cannot trade with unsettled funds, okay? So just know that your buying power goes off of what you have in your account the beginning of trading or when the market opens that day. Okay, so you have to live to trade the next day with your earnings that you made. Got it? Okay, so buying power is super important. Okay, all right, y'all. So these are two of my favorite terms. These are all cool. Like when you get to know these, it gives you confidence, right? So like when you're talking, when people are talking and you're hearing videos or you're watching my videos, you're not like I'm speaking a different language. So if you need to watch this video more than one time, please do, because I know where you're at right now. This sounds like gibberish. It sounds like a whole different language, but I promise you, if you stick with it and watch all the videos that I have on options trading, it will help you immensely. I'm making these videos from the standpoint and the viewpoint of a complete beginner, right? So just understand, and as an educator, you know, I know how to structure information so that it's digestible for you. So therefore, if you need to rewatch this, please do. And like I was saying, you need to make notes. And I promise you that this will be your little cheat sheet guide right here, this video, when it comes to trading options. So that being said, the next term I want you to write down is long. When I'm doing my research and learning in the beginning, when I was like, oh, I'm gonna long this, you know, I'm about to take long on this stock, or I think da-da-da, I'm like, what are they talking about? What do they mean long? Who is long? Why? What is long? It don't look very long to me. Y'all, long simply means that you're thinking or you're predicting that the stock is going to go up and you're believing that it is going to be a bullish trend, right? Another term for long would be a call, okay? So long, call, bullish. You could put those all in the same line. Long, call, bullish. Literally the same thing, okay? Second term, or the next term, is short. Short means that you believe the stock is going to go down. So you would be getting a what? A put, right? You would be purchasing a put. So the next term would be short, put, bearish, okay? Stock is going down, okay? Those are very important that you remember those. But once you get those stuck in your brain, you'll be good to go. All right, next term, gap. It's literally that, a gap in price action. Okay, there is a gap in price action. There's no sale, there's no movement, there's nothing happening. And there's a strategy to trade gaps, where we call to fill the gap, but that's a whole nother video. But just being aware of what a gap is, it's literally a space in between the price action. Price action is the candles, right? The red and green candles. So you may see a space in between there. Hopefully my assistant will get me an image of that for you to see here. Okay, great. Let's go on to the next thing. All right, y'all. I hope you're enjoying the video so far and learning something new. If you are liking what you're hearing and you want more information and you want it more in a community setting, I have a free Discord down below. And even for my premium members, I do live trading and more in-depth training inside of my Discord. So check out the description box below for more information. All right, let's keep going. All right, y'all. So the next two terms that I want you to pay attention to is high of the day, or HOD. High of the day is simply the highest price of the day. I like to pay attention to the pre-market high price of that particular stock. And then the second term you need to pay attention to is low of the day. I like to look at the pre-market high and the pre-market low, and those are usually one of my critical levels that I mark in the beginning of trading. Let's go on to the next term. Okay, this one is so important, and I talk heavily about this when it comes to the psychology of trading, but the term FOMO, it plays a part in trading also. So FOMO is literally the fear of missing out, and how to manage your emotions when it comes to the fear of missing out. So for example, you were looking at the Microsoft ticker, right? You were watching Microsoft to do something, and all of a sudden you click over to Amazon, and Amazon has gone bonkers in a call position, right? All Greek candles, it looks like Mount Everest going straight up, and you missed it, right? You were on Microsoft. Then guess what you catch? FOMO. Instant FOMO. Oh my gosh, couldn't I have got that? Oh my gosh, what if I would have gotten that, right? Let me see if you about to double dutch it, right? You leaning in, you ready to go. But guess what? The minute you stick your neck in there, the market knows that you're trying to make up for FOMO. So guys, you have to understand, if a move has already happened, you are running a huge risk of jumping in. You get what I'm saying? It's just like the double dutch. If you have not stretched well and you haven't double dutched in a while, shoot, you might embarrass yourself or hurt yourself by jumping into something that you wasn't ready for or you already missed. So FOMO is real, and you have to figure out how to manage your FOMO to, make sure that you are not putting your account at risk, okay? So FOMO is real, be aware of it, and know how to talk to yourself and say, hey, you'll get the next one. You'll get the next one. Or let's look for another trade. I like what my millionaire mentor always tells me, right? You have 6 hours to make one great trade. 6 hours. And there are hundreds of tickers, hundreds of stocks. So all you have to do is find yours. Okay, or make your, get ready for your trade. Because if you jump into a trade that has already happened, you may blow your buying power for the day, and then you're done for the day. And it's going to be a really bad situation. Okay, let's go on to the next thing. Last but not least, and I like that this is last, if you stuck to this video all the way to the end, you are a rock star. And just give yourself a pat on the back, because I feel like if you've made it this far, you are serious, you're not curious, and this is what you want. And I'm so proud that you've made it this far. So give yourself a nice pat on the back. You did awesome. So last but not least, risk management. Star risk management, right? Risk management is a way for you to mitigate your losses, right? Or manage your losses. It's literally that. You're managing your risk. Obviously, we're in this game to make money. Obviously, we want to see a lovely return on our investment. But how about being able to trade the next day and the next day and the next day and not have to keep redepositing money into your brokerage account, right? The goal is to grow your money. It's not to have to keep depositing in there, right? So what risk management does is it helps you manage your losses. Obviously, we're trying to grow, make the most money. So the best thing we can do for ourselves is manage the amount we lose. You can lose 50% of your trades, right? So if you are trading Monday through Friday and you have 3 green days and 2 red days, that is perfectly fine. But those red days, if you manage them and they're anywhere from 100 to 200 losses, depending on your account size, then that is something that's manageable, right? Versus if you sit in a bad trade and you lose $500 to $1,000, then going forward when you're trading, you're gonna be chasing that loss. And I'm saying this from experience. You'll chase your loss, right? And guess what? It's going to be a bigger gap to make up $1,000 versus $200. Do you see the difference? So don't let anyone tell you, including any other guru, any other Discord mentor, anyone tell you that they don't lose, right? There's no guarantee in the stock market. If they say they have a guarantee, they about to get locked up by the feds, because that's insider trading, right? So the only thing that you can do to safeguard your account is manage your risk and live to trade another day. So if the trade is not going your way, cut your losses and look for the next one. Remember, we only need one good trade. All right, y'all. Thank you so much for staying all the way through. If you have liked this video, make sure you give me a thumbs up and comment down below if you want to hear more videos about trading options. But if you really want to get down with the group and the community, the Boss Up family, check out the Discord below, where I have a free chat, but I also have the premium channel where I do live call outs and more in-depth information where you can learn as you earn, right? I will do the live call outs of the stocks that I'm taking while the market is open, so you're not doing this on your own, okay? So if you're interested in that, make sure you check out the Discord below. And without further ado, I hope you have a blessed day, a blessed week, a blessed month, and a blessed rest of the year. See you soon.